year 2020 wrought havoc on economies as countries instituted mandatory lockdowns due to the COVID-19 health pandemic. This resulted in lower economic growth and in turn lower tax revenues. 2021, however, saw both categories jump in a number of African countries, with average GDP growth pegged at 12.8% and tax revenues jumping by over 15%.
I think after the pandemic period, there was a lot of activity that happened and there was improved GDP performances as economies opened up again after the lockdown. And because of this, as we know, tax revenue is a function of GDP. So naturally, even the tax revenue then increased because the economies were opening up, people were trading, they were actually trading more.
Despite the economic challenges that African tax authorities operate amid, they're trying their best to ensure maximum efficiencies in their collection of taxes by investing in areas like big data analytics, artificial intelligence and machine learning.
This was one of the positive outcomes because everybody realized that for those who had invested in technology, they had less challenges. And so everybody increased the use of technology. And that is a key driver now because most of the tax administrations have now gone completely into e-filing, meaning that even for those taxpayers who are a bit lax in terms of filing, they now capture that electronically. The second is e-payment, which also brings in efficiency gains.
ATAF says in the short to medium term, African tax revenue prospects are looking good on the basis of a continued expectation of higher economic growth levels, as well as a deliberate move by tax administrations to digitalize all their processes. Nampumelelo Siziba, SABC News, Johannesburg.